The market value of Standard Chartered plunges by $15 billion. New York regulators threaten to tear up its banking license for allegedly hiding $250 billion in transactions linked to Iran. But hopes that Europe is inching towards a breakthrough in the debt crisis lift European stocks and the euro to their highest in nearly a month. Welcome to our look at the day ahead in Europe, where the fallout from Standard Chartered is certain to extend into another trading session. The affair comes, of course, in the wake of lax money laundering controls at HSBC and the LIBOR-fixing allegations centred on Barclays. Brenda Kelly of CMC Markets says the message is clear: stay away from bank stocks.
I think the contagion effect does seem to be dragging a lot of the banks downwards. I would be tempted to stay away from the banking sector for a long time to come until we get a lot of these black swans out of the way. And of course, it does seem that there is no end to these black swans. And of course, the LIBOR issue, I think, is something that's going to go on and on.
Looking ahead to Wednesday, the Bank of England set to slash its 2012 growth and inflation forecasts. With Britain's recession dragging into a third quarter, the bank is widely expected to unleash another round of economic stimulus. Just not yet, says currency strategist Jane Foley of Rabobank.
We know that there is very unlikely to be any more action from the Bank of England before November. And the reason I say November is that when the Bank of England last stepped up its QE target last month, it suggested it would take 4 months for that target to be met.
Germany will sell up to €4 billion in 10-year bonds, with sentiment in the Eurozone improving since ECB President Mario Draghi laid out his roadmap for helping Italy and Spain. We could see some softening in demand from ultra-safe haven German debt. Finally, the European corporate earnings season is tailing off. ING reports second quarter results Wednesday, and we may get some more detail on the sale of assets forced on the Dutch bank in return for state help during the financial crisis. The slowdown in China likely to be reflected in earnings from Rio Tinto. Earlier this month, the miner announced it was closing its Sydney office and cutting jobs in response to falling commodity prices. That is all from us for now. There is more on Reuters.com and the Insider platform. And join us each day throughout the week for Reuters Today, a snapshot of the latest world news and market headlines. I'm Axel Threlfall. This is Reuters.